to the road to growth, success of an entrepreneur.
We've raised the bar.
Learn firsthand from successful business owners and create your own path to success.
I'm going to show you how great I am.
It's time to hit the road to growth with team lead of the Enriquez Group, Realtor Vinny.
Hi, Realtor Growth listeners. Today I have Dan Haberkost. Did I say that right?
Yes, exactly. Yep.
You know, I was thinking about, cost, money, he's an investor. Okay, this is the way to do it. Did you ever think of I know your company's name is Owner Front Range Land LLC.
Yeah, just Front Range Land. Yeah.
Yeah, Front Range Land. I don't know why I was saying owner. But Did you ever think about Haberkost, like kind of something with a cost in there or something?
No, I can't say I have. That's probably not a bad idea though.
Okay, I don't know. That was the first thing that popped in my head. I was like, okay, this is gonna be tough. I usually don't crush last names. Last names are not my forte.
Sure. Very German, Haberkost. Yeah,
that's fantastic. Well, so it's funny. We were talking before we got on mic that one of your future partners was actually a past guest of mine.
Yeah,
Brent Bowers, right there.
Mm-hmm. Absolutely.
Do you have any negative words to say about him?
No, absolutely not. Brent and I are doing a bunch of projects together in our business right now. And I bought his course years ago, and it was just kind of a turnkey system for buying and selling land. So I have all the motivation in the world, but I'm not much of a systems person. I'm not very organized. So just that turnkey from A to Z business model was useful because then I just implemented it, put people into it.
Well, yeah, diving into that. So your company basically, fix, hold, renovates, develops. I mean, it seems like it's a wide variety. I mean, I was looking on your website where you actually got the seller to hold the note.
Yeah.
For 2 years, and then you're going to refinance, I guess, after that. But I mean, it's quite the wide variety of stuff that I think your company does, huh?
Well, I look at there being two buckets. There's the passive buy and holds, or somewhat passive, and then there's the active business. So what you referenced is just one of my buy and holds, and he's actually holding it for a full 17 years. So it's 2 years interest only, and then it switches to a 15-year straight line amortization note, actually at 3%. So that's awesome, obviously. And then on the active side, I have Front Range Land, and that's the company where really the base of it is just the marketing system that allows us to buy land at 30, 40 cents on the dollar. I sell some for cash, some on notes where I carry the financing, and then I build on the parcels where it makes sense. So that active business feeds the passive investing, and we can get into that. But really, after buying a couple rentals, I learned that, hey, this is a cash intensive venture, and you can pick up a few house hacks or rentals without a lot of money, but somebody in the situation or in the partnership has to have cash because things are going to come up. This is just a cash intensive business. There's no other way to put it. So Front Range Land creates a lot of income that I can then put into rentals.
Well, I mean, very intriguing. I mean, we'll see what the market does in the future. I'm not sure how Colorado is right now. Yet our inventory is so low that if you brought that idea at this current time to someone of, hey, carry the note for the next 2 years, they would probably laugh you out of the room. How's the market over there, and kind of what happened with that deal?
So Colorado's a lot like Arizona or Texas or any of the Sun Belt states. People are flocking here in droves. I mean, the growth. I'm from the East Coast where it was already pretty built out, or the east side of the country. So this was new to me moving here, but yeah, we're growing like crazy. It just so happened that we found an old, very wealthy investor who was tired and had a huge headache on his hand. This was a big rehab. Had to lower the main beam 4 inches, replace every inch of plumbing from the house all the way to the street, complete cosmetic rehab, new panel, and it was a big project. So he was at the point where him and his wife wanted to go to Arizona for the fall and winter. The tenant decided to give him a short notice, and all of a sudden he's stuck with a property that needs rehabbed if he wants to put another tenant in it, and he can't sell it off traditionally because it's not going to qualify for any sort of traditional financing. So even though the market is extremely hot, his specific situation made him want to find someone that could handle the rehab and who he felt comfortable lending to. So with the experience, the rentals, the land development business. He was comfortable carrying the note. And then plus, like many other people right now, he has so much cash in the bank that he didn't really want to sell it for cash because, I mean, you're losing money on cash that's just sitting in the bank very quickly right now with the inflation. And so he was looking for some sort of return, and offering seller financing was the opportunity to do that. And again, tired, wealthy, old, just wanted to go on vacation with his wife and not think about it. So that's why that opportunity came about, even though we're in a very, very competitive market.
Did he find you, or you found him?
He posted on Craigslist, believe it or not. So
Wow.
Found it via Craigslist. Yeah.
All right. Well, you know what? For people that say Craigslist is done.
Oh, I have gotten so many land buyers through Craigslist that have bought 4, 5, 6 parcels. Met one of my investment partners initially because he reached out on an ad from Craigslist. I've gotten excellent tenants from Craigslist. I think it almost got such a bad reputation that everyone just got off it for a little while. And it seems that there's some activity again and just less scammers because I've gotten a lot of value out of that, especially being a free platform.
Yeah, I mean, I got a lot of value back in the day from it, and then I kind of walked away from it. But I mean, I'm gonna have to reassess it. So this is a question I usually ask a little bit earlier. What's your elevator pitch? Someone's in the elevator with you, Dan, and they're going, "Hey, Dan, what do you do? How do you describe yourself?"
Honestly, I'm just an investor, and land and development right now just makes sense given the market, the lack of housing, and the specific area that I'm in. Um, you know, it depends what that person is, and if they're an investor, I might pitch it a little bit differently. But really, that's how I look at things. It's not that buy and hold single family is the best strategy ever, or that land is the best strategy ever. It's what is the market doing? What is the need in the market, and where can you find uh, what's the word I'm looking for? Inefficiencies, right? A unequal weight between people that are looking for housing or looking for some sort of asset, and then the people supplying it. So with land, let's use an analogy to people that try and go do the same thing with houses. It is very hard to get a deal on a single family house here or anywhere. Actually, Brent, who we just talked about, he started with a wholesaling company after years of fine tuning his marketing. I think he told me he spends $6,000 to get one house under contract. I spend $100 to get a lot under contract at 30 to 40 cents on the dollar. So it's a not well understood asset. It is neglected, and it's very in demand with the end user because so many people are looking to build houses. So that kind of inefficiency there presents such an opportunity. It's really, really been a windfall and a much easier business to get into because it's such a lower barrier to entry as far as capital, and I just don't have much competition.
Well, to give you an idea, to back up Dan right there, is and I've said this a couple times on different podcasts, one of the biggest flipping companies in San Diego County makes more money on their classes than they do on the flips.
Oh, man,
to
that's
give you an
crazy.
idea of what your competition is out there, that's your competition on fix and flips. Well, let's talk about a young Dan. I mean, I'm guessing you at least look young right there. So,
I'm 25.
Okay, 25. So let's roll it back maybe to 15 or teens or whatever it might be. Did you have that kind of entrepreneurial mindset of taking it? Was your family into that? Or let's go back to a younger Dan.
Yeah, that's a great question. So growing up, came from a very stereotypical Midwest or Ohio family, right? Super rural, had no money. No one had ever had money. Everyone either went to the army, went to jail, or got some very, low end job in a factory or a farm or something like that. And I had a lot of older siblings, older cousins, and I kind of watched them all follow that same path. And I could not see myself doing that. So by the time I was in middle school, I was selling stuff on eBay to make money. By the time I was 16, I managed a portfolio of rentals while also managing my boss's farm. Well, he traveled for a good portion of the year. And that was my first experience with real estate. In hindsight, he was a bit of a slumlord. So that definitely did not make me want to invest. But really what it taught me is I don't want to own, D rentals. And then, so worked all throughout high school, ran other people's businesses. And then in college, actually ran a landscaping company while going to school full time. And it was right around when I was 20, 21 years old that I was a little bit frustrated because definitely did not have the traditional high school or college experience. It was school, work. I paid for college myself as I went. But I thought, okay, if I can work 45, 50 hours a week and go to school full time, I can definitely figure out how to start some sort of business to make sure that my situation is different as I move into the real world, get out of school here. I started reading different books, read about equities, different businesses I could start. And like just about everyone else, it was Rich Dad, Poor Dad. That was like a light bulb moment when I read that. So bought a duplex 2 months later when I was 21, while I was still in college. And that was what started it. But
Where did you get the funds for the duplex?
Well, I was working full time. So I was able to do the 3.5% down payment. And then I had a W-2, paid for college outright. So no debt, and was able to, just qualify conventionally.
Nice.
Yep.
Were you, I know you're listening to or reading Rich Dad Poor Dad.
Mm-hmm.
I do a lot of audibles. So when I said listening,
Yeah.
But you're reading Rich Dad Poor Dad. Was there any kind of scarcity, scared, not sure, uncertainty of actually signing that contract and purchasing that duplex?
Yeah, so it's interesting. In that first one in particular, I was very excited and jumped right into it. But as the years have gone on, and leaving the W-2 was probably the hardest part, where that stuck out the most, because again, the background where I was grown or raised in, money, the adjectives or the feelings I think about when I think about money are worry, anxiety, tension, fear, conflict, right? And so leaving the W-2 job was probably the scariest part for me. And that definitely kept me awake for a long time, because there's always at nights, a lot of sleepless nights is my point, because there was always that little voice in the back of my head kind of coming from childhood saying, hey, you're going to fail. You're not going to be able to consistently have a profitable business. The sky's going to fall. Your sewers are all going to burst and roofs need replaced at once, right? Those thoughts have been pervasive since the day I started my business, and they still are. It's gotten better, but it's taken a lot of work to control that. And I've kind of labeled it in my head just as I haven't gone by Daniel since I was about 6 years old. So when I have those thoughts, I think of it as the scared little child, Daniel, talking to me. And it just is ridiculous, basically. So that has taken a long time, because that's what I was raised on. My dad is a worrywart, to say the least. So trying not to follow that same sort of thinking and mindset.
Well, when did you actually get the idea that you could leave that W-2 job, and then how long did it take for you actually to leave it?
Yeah, so let's go back. I bought the duplex when I was 21. I was still in Ohio, but I didn't want to stay there. I wanted to go somewhere a little more exciting, so I moved to Colorado and bought a single family house to house hack out here. So I had the duplex and the single family, and it was clear to me from a young age I couldn't work or didn't want to work a W-2 job in the long run. But at that point, I hadn't figured out how to make enough money to do that, or to buy enough rentals to leave traditional employment. So it took several years, and I didn't actually leave until the end of 2019. And I'll tell you, I just, that last job I had, I absolutely hated it. But that first year, or not quite a year, maybe 8 to 10 months, even though I was figuring out how to make money, I didn't spend anything that wasn't essential. And I was just extremely careful, almost to a fault, really. I made it a lot harder on myself than it needed to be. So to answer your question, when I left my job, I was definitely scared. There was a lot of sleepless nights, but I had hated that last job, and it kind of pushed me to my breaking point where I just quit and just went for it. But it was not easy. And even today, like when I look at what I'm making, sometimes those thoughts are still pervasive. Oh, you're going to fail. You're not going to be able to pay for food and housing. But I mean, it's not rational, but those are still there, but it's gotten better. That was kind of a long answer to your question, but I hadn't dealt with it when I left my job. I hated that last job I had so much that kind of pushed me over the edge. And it was, the first 8-10 months after having left traditional employment were definitely stressful, because then the pandemic hit too. And so obviously, nobody knew what was going to come of that.
Do you think, going forward in your business and what you're doing, building the companies, building the businesses, is it going away from fear, that Daniel in your head, or is it going towards pleasure of building something bigger?
Yes. So finally, especially going into this year, because 2021 was a very strong year, I have moved away from that fear-based mindset. I'm having the most fun I've ever had with my business. And I'm not worrying near as much. I'm getting a lot better of focusing on the positive as opposed to the negative, and just looking back and thinking, okay, you have quite a bit of reserves. You've figured this out. When things go wrong, you have the capability to figure it out. So getting better, but it's a constant battle. And I think it really comes down to self-awareness being the most important thing, because when you start having those thoughts, stopping, thinking, wait, no, this is ridiculous, and not letting them, take you down a dark hole.
So you buy the duplex,
Mhm.
get the single family unit. Are these all on market still?
Those first two were, yes.
Okay. And then after that, you start looking at properties off market, right?
Yeah, the third one was off market through a wholesaler.
Okay. Through a wholesaler. Now, the first, because I would think, right, and knowing people in this sector, age can play a factor, especially when you're dealing with older owners. Sometimes they say they can use age as a hindrance a little bit. Some people can, right? So was there ever something like that came about when you're trying to negotiate a deal to purchase a property, and they saw how young you were and they go, oh my gosh, or I can't do this. And they don't take all the background, all the information that you know.
Yeah. So honestly, Vinny, at that point, no, it's not been a problem. After years of having been in business, when I need to look someone in the eye and speak confidently, I can.
Yeah.
I have no trouble with that. But when I was 16 at that tree farm dealing with 30-year-olds that I was managing, yes, that was certainly a problem because I had a baby face. And yeah, if you're dealing with that out there, maybe you're a little greener and so you don't have the confidence. Well,
there's a high producer that I know that he was like early, I think 22, and everyone just, he had a really baby face on it. And what he would do is his listing presentations, he would bring a stack of paper because he was crushing it. He was doing so much about the business, and he'd bring a stack of paper and going, this is what I do. So let's get the age out of the way. Let's talk about your property. Right.
That's awesome.
It was an issue that constantly came about because he just looked so young. And so that's why when I look at you, I'm just going, maybe you have that confidence, you have that knowledge, but we're just basically a stereotype to people when you first meet them.
So I haven't really had problems with that since, college, really. So at the landscaping company in college, I was managing guys much older, and that took some time. But for those of you that are having that problem, I would kind of shift the frame a bit and think about it, especially in the context of real estate, as an advantage. And I'll tell you why. The older guard loves to help generally. There's always exceptions, but loves to help the young people who are trying to get started. If this is a big if you're humble, you're energetic, and you're willing to listen and do and take their advice. So yeah.
And I'm going to put a caveat next to that. If they're actually doing what they say they're doing.
Yes.
If they're not doing that, I think it's in most sectors, most businesses. Any entrepreneur I've had on here, they've usually talked to someone, a mentor, and talk to someone else, and people are willing to give information freely.
Yeah.
If they're actually doing what they say they're doing. If they're not, and they're being negative about it, that's probably a person you don't want, and a person that's probably not doing the business they're saying they're doing.
Yeah, that's a great point. So the person you're looking for mentorship from needs to be legitimate. But I can give you an example, within the first couple of weeks of moving here. So in 2018, I was at the real estate group that I now host. And there was a guy that stood up and said, hey, been in the business for 40 plus years. Have done just about everything you could expect all over the country. Looking for some help on the admin kind of clerical side and didn't know technology very well. If someone will come help me, I will teach them some of what I know. And he lived about 45 minutes, an hour south of Colorado Springs. And of course, everyone raised their hand and got his number and went and said they were going to help him. Well, of everyone there, he had to have given his number to 20 plus people. Only 2 people called him, myself and one other. The other guy gave up after a week or 2. He said, yeah, I can't do this. It's too much. I went down there and helped him every weekend, 1 day a week for almost a year, almost nonstop. And it was so clear to me after meeting with him a few times. He's showing me apartments he's built in Baltimore and land and notes. Just everything you could imagine. And I said, okay, this guy knows what I want to know. So I'm going to keep helping him and learning from him until something comes of it. Well, it did. And it took time, because if you want quick mentorship, you better get your checkbook out. If you want to develop a genuine relationship with someone and just really become friends over time and learn that way, that can be free, right? So that's what I did. He became a friend. He's one of my primary investors, and again, just a lifelong friend at this point. And I have learned a great deal from him because he has done just about everything. So, yeah, to young investors, find that sort of person, provide them value, be humble, and take their advice.
That's a fantastic story right there. I mean, that's that's the nugget right there. If you're listening right now, rewind that and listen to it again or play back. I mean, I guess we're not talking about rewind. I mean, this is go back to where it was.
Yeah.
Play that again, but that's fantastic, Dan. So, I mean, talking about growth, talking about expansion.
Mm-hmm.
If we're talking in 5 years, I mean, where do you see yourself? Where do you see your businesses being?
Oh gosh, 5 years. Yeah. Every time I set goals for the year, I break them and then I end up trying to expand them within the year. So I usually don't think that far out, but some of the big pivots I'm working on right now, and I meant to accomplish this at the end of last year, but ended up it didn't happen. It was too much. So I want to get out of the residential space on the buy and hold side. I'm looking to purchase a commercial property here. I sent out some marketing for this at the end of last year, and I was very anxious, worried. I just didn't have the confidence yet. So I ended up putting the pause on that, regrouping, planning, and I'm going after that this beginning of this year here. But I don't want to build a huge portfolio of residential properties. I am nervous about further and increased government intervention in that world, especially as prices just keep going up. And I want to get out of what is it? What's the word? There's a word for it, but just actual housing. And so anyways, I'm getting some marketing going for a mix of industrial retail. And I have a bunch of friends in that space. And so looking to move into that for the buy and hold side. And then on the the active side, man, 5 years from now, it's really hard to say what I'll be doing. But right now I want to scale. I'm scaling my income to a certain goal, and I can see myself integrating vertically. I am so frustrated with title companies. I'm sending these people 6 to 10 contracts a month. And the frustration with them, right before we got on this call, found out that one of the properties we bought 3 weeks ago, the title company had not dispersed the funds to the seller. Like, oh my gosh. So yeah. And this is the kind of crap. Yeah, unbelievable. So I can really, I'm enjoying mentoring good people. Like my acquisitions manager has been just fantastic. The one in particular, she's picking things up quickly. I like showing her how to buy rentals. I'm teaching her the dispo side. I enjoy that a lot. So I can see myself with time eventually just working to be the consultant and the bank on different businesses based off of good people, helping develop and grow good people, funding them, and then starting multiple businesses within real estate. That's kind of how I see myself on the active side in the long term, and then working on growing a commercial portfolio.
So you talked about the marketing, putting the marketing pieces out there for the commercial. My guess is that, to this day or now, I guess most of your business comes from your own marketing, right?
Mm-hmm. Yeah.
Okay. Now, do you have, because you have classes too, or you teach people?
Working on it. So Brent and I, who we referenced earlier, will be releasing just an A to Z turnkey business model. So just my business in a course at the end of this 8 to 10 weeks from now on buying land off market, building on it, selling it, etc.
And in this course, and if you're listening right now, the YouTube is usually out a little earlier than the podcast, so it actually might be out now. So you have to take a look at Dan's website and the information there, and we'll talk about that a little bit later into it. Will the marketing pieces that you use to get the business be in the course, you think?
Yes, everything. I want a practical model, A to Z, of how to do it. I don't want to sell anything that's not practical. What I use every day. That's it. Yep.
Now, how do you juggle all the different sectors of managing the properties, finding new properties, managing your team?
Mm-hmm.
How do you juggle all these different hats?
Yeah, that's a great question. It's finding the right people. That's probably been one of the biggest lessons here in the last 12-ish months. Is just I'm going to work on hiring someone else here soon, but just find the return can be almost infinite on the right people. So I look at what one of my acquisitions managers does. I have 2 of them. One in particular is kind of the key one, and she just takes an enormous amount of stress and work off my plate. She handles all the inbound leads as far as land. She's dealing with selling them. A lot of them we just list with realtors, but some of them she gets sold by just sending out to our buyers list, handles the transaction coordination. Then I have realtors that sell the lots, and then I have different general contractors that build the houses, just a normal contractor that's doing this rehab. So it's really more than anything a matter of finding the right people, and then at the same time having the right systems in place. So I have a very clear SOP or standard operating procedure for land acquisition, land disposition, transaction coordination. With the house, I'm just building the same house over and over again. I already have the 3D walkthrough with finished pictures of what it looks like when done with my realtor, build it on the same size lots. So it's a combination of good people in simple fine-tuned systems. And that combination can get a lot done with pretty minimal input once it's going. When you're setting these things up, you got to know how to do it. You've got to have iterated a few times yourself. But then you can start to put people in and systems, and it just greatly reduces the workload and scales what you can do.
What was the process like for you in the hiring? I mean, you said you have 2 acquisition managers, one being very good.
Mm-hmm.
What was that process? Was it luck? Was it skill of finding them?
Yeah, so I paid for a posting on Indeed. I interviewed a number of people, and she was just getting out of the military here in Colorado Springs, is a big military base, and was looking for something that could teach her about real estate and then also make money. So that was great. I gave her and everyone I interviewed the culture index for anyone that's ever used that personality test, and her personality was very similar to mine, just a slightly less extreme version. So easy for me to relate to her and talk to her, and I know how to manage her, so that helps. And then the other one was brought to me through a friend. I think he just introduced us because he knew the other guy was interested in land. So same sort of deal where he really wanted to learn about land. So I said, well, here, I can put you into this system and have you as an acquisition manager, and you can learn. And so that's been great. That's how I found those 2.
How many do you recall how many interviews you had to have for the hiring of the female one?
I believe I talked to five people, so 5 interviews. So it wasn't too bad. Too bad. Yeah.
Going back, I know relatively not that long ago. Is there any advice you would give to your younger self, that person that hadn't bought a house yet, that was looking, that just listened to Rich Dad Poor Dad or read Rich Dad Poor Dad? Yeah. Any advice you give to that person or maybe someone else that's in that same scenario?
Yeah. So that first duplex, there was a lot of issues with it because unlike with the land and the development, I did not find or pay for a mentor. I jumped into that. I was, pretty confident. I had that W-2 job I was telling you about. And for whatever reason, and like many people, that gave me a sense of security, even though I didn't make that much. And I did everything wrong. There was an existing tenant in one of the units, and the classic, oh, can I give you the security deposit as last month's rent? I fell for that. The selling agent, there were things in the contract they didn't stick to. They didn't leave the washer and dryer. It was a brand new one too. It's like $1,500. And then my agent didn't have my best interest in mind, it turned out. So she didn't do anything to go after them and get that. I messed up with the property manager I hired when I moved. So yeah, that's number one. Everything is easier if you can shorten the learning curve by just finding someone who's done it, learning from their mistakes so you don't have to make them. Thankfully, I made them on a $134,000 duplex as opposed to the more expensive properties out here. So it was livable. And then I would say just the other thing is probably hiring quicker, because that has just amplified everything so fast. And this is something I'm thinking about right now. I heard it said on a podcast the other day. The guy had 200 and some employees and contractors all working full time. And he goes, I have 1,600 hours a day. So 8 times 200 that someone I'm buying, and they're arbitraged. I make more on every one of those hours than they cost. And that was such an interesting way to frame it. I'd never heard it said like that. And I'm sitting here actually on my whiteboard in front of me here. It's kind of I like to write questions on there that make me think, how do I buy more hours every day? So yeah, that's the other one that I would highly recommend is once you figure the business out. I mean, if you're making no dollars, then that's a problem. You need to figure that out. But once you've iterated a few times, record it and offload it.
Love it. If someone's listening right now and they heard a bunch of nuggets, they're looking to get more of it, what's the best way of them like reaching out to you, following your journey,
Sure.
staying in touch of what you and Brent do in the near future?
Yeah, go to danhaberkost.com. You'll see lots of projects I'm working on and what I'm doing. And then also you can follow me on social, Instagram and Facebook, Dan Haberkost. Just a combination of deals I'm doing and mountains and I'm snowboarding pretty much. So
It's fantastic. Well, thank you. I appreciate you, Dan, for being on the Road to Growth podcast. Thank you, everyone listening. Please subscribe, please share. And it doesn't, and Brent talked about it before, it doesn't take too much money to buy and hold and flip land. I mean, there's so many opportunities out there. If you get creative, you got to listen to the right people, listen to people who have done it before.
Yep.
But get creative. Find that mentor like Dan talked about. Thank you, guys. Please subscribe, please share, and go find Dan. Bye, everyone.
thanks, Vinny.